Welcome back to the Tax Law Channel, an affiliate of the Legal Broadcast Network. These broadcasts are sponsored by ATG Trust. I'm Scott Drake with my guest, Robert Wood, with Wood LLP in San Francisco, and an article written about Forbes, or in Forbes rather, why Americans want a Buffett tax. And Rob, welcome back.
Thank you, Scott.
When you talk about the Buffett tax, you're talking about a flat tax kind of mechanism, which surprisingly enough, I've heard you say would probably be a good idea, despite I think you make most of your money by the complexity the taxes cause. But in this particular case, talk about what you mean by the Buffett tax and why Americans would like to have that.
Yeah, it's there's been so much rhetoric about this, and it's interesting. Warren Buffett's name, has attached to it, I think, inextricably now. A Buffett tax, President Obama has featured it prominently and continues to do so. And of course, Mr. Romney says, as you'd expect him to, it's a bad idea. It's an interesting idea. I believe the way it's been proposed is a bad idea. That it is effectively a kind of minimum tax. The idea is to make sure that people above a certain income level, $1 million is the proposal, would pay a minimum rate of 30%. I think recently there's been a little bit of press over the fact that Mr. Obama himself paid an effective rate less, or a marginal rate less than 30% on his own income. His income, I guess, dropped because of lower book sales or something, and obviously the presidential salary, is modest. It certainly, doesn't get him above the $1 million range. So I guess, to me, it's hard to talk about the Buffett Rule without talking about minimum tax, proposals historically. And we all, many of us, as we've discussed here before, face, either personally or with clients, face alternative minimum tax issues every year, and they're a nightmare. And I think the Buffett tax is seen, in my view, appropriately as more of the same, sort of tinkering with a massively complex tax code that is only getting worse, not getting better.
And largely something like this, would you agree, would be symbolic, because an AMT, for lack of a better term here, on the wealthy, is that going to raise a significant amount of revenue, or is this just their way of saying, just to show that the wealthy should be paying, a lot more?
Yeah, I mean, I think that symbolic is a good word, Scott. I think it is. I mean, that's sort of a social justice notion, and to me, anytime you start talking about the tax code, which everyone does these days, certainly everyone in Washington does, implementation is key. And Scott, you just asked about revenue effects. There is an entire group of people within the government that does revenue estimators, and much of it, I don't mean to say that they're not smart people and they're trained economists and this kind of thing, but a lot of it is speculation. It's educated guesses, but if you look at their track record, it's not all that great. Sometimes, they project that a certain bill in Congress, let's say the tanning excise tax on tanning booth, which I know is kind of a weird one, but they projected a certain income level from that, a certain collection of taxes, and they were off, by, as I recall, something like close to 100%. I mean, it was just dramatically wrong. So I think oftentimes, even on something that's more mainstream tax bill, like something like the Buffett tax, they don't really know. And I think it is symbolic. I think that when you talk to people about the '86 tax reform, that's 25 years ago now, 26 years ago, I guess, it was a massive overhaul of the tax system, made huge numbers of changes, and we clearly need that now. I mean, in my view, a flat tax or a modified flat tax would be better for everybody, and I'd find something else to do other than look at the tax code every day.
Well, do you think, if you were to just With your own experience, would a flat tax generate more revenue, as much revenue, less revenue for the government?
Yeah, I mean, once again, you'll get. There's been a lot of press about that, and I think you get people lining up on both sides. Some saying, I think accurately, but I admit I don't know, that a flat tax would generate, at a certain rate, would generate a lot more revenue. I think you unfortunately then get into a debate that is awfully hard to solve, and I don't think you can solve with numbers. And that is this kind of sort of social debate about progressive rates. And if someone is, I mean, the concept of a flat tax, if someone is making $100,000, $500,000, $5 million, or $500 million, if you have a flat tax where they're paying, just to pick a figure, 17%, is that fair? Should the person making $100,000 pay the same rate as the person making $500 million? We can't solve that with economists. I mean, it's sort of a social issue, and I don't know the answer. I would say that one of the flat tax debates or points of debate has been, inevitably, at what level do you set exemptions? I mean, the person who makes $100,000, probably most people think, and I think, really shouldn't be paying the same amount of tax. Maybe they should pay the same rate, which is a different question. Maybe they should pay that 17% on the last 10,000 of their income, or the last, the last 50,000 of their income, but the first 50,000 should be exempt. I mean, I don't know, but those are questions that I think we should be asking, and not focusing on, this guy makes too much money, let's just add another thing to the tax code to make it more complex.
And perhaps the solution is there, it's just too politicized to make it apparent. Well, we appreciate your time, Rob, as always.
Thank you, Scott.
Rob Wood is partnered with Wood LLP in San Francisco. This article in Forbes is entitled "Why Americans Want a Buffett Tax." This is the Tax Law Channel, an affiliate of the Legal Broadcast Network.